Yo guys, today we're going to be doing a trade recap on the trade we took today on NASDAQ 100. So going into market open, we saw, if you haven't seen the weekly video, we were looking for buys because our daily time frame was in the uptrend. See, we closed above this high over here, and it looks like we're shifting to an uptrend on the daily, and we mainly play what our daily bias is telling us. Almost all the higher time frames actually are telling us bullish. So you can see this closed above the most recent high. We never switched back to bearish after that. The 1 hour as well, it was also giving us bullish confirmation. We never broke. Oh, we broke to the downside over here, but then going back into as Monday market was coming up, we switched back to bullish. So I was gonna be looking for longs going into market open. So what I saw coming into market, again, if you haven't seen the weekly video, I was expecting price during the week to come back down here, fill either one of these huge imbalances that we created, or possibly this even bigger imbalance on the way higher time frame. But we were probably not going to get that for today. So in going into market open, I was paying attention to the lower time frames. On the 1 hour, we couldn't find any fair value gaps to take positions off of, but scaling down, we did have this one right here. If we like adjust this, we have this really small one, which it does look like it respected it during the day, but I was not paying attention to that. That was so small, and I didn't really care too much about that one. So yeah, I don't really spot any fair value gaps. So I'm looking scaling down to the 15 minute, and I find the same area has a similar fair value gap, but a lot nicer. As you can see, it formed that fair value gap, rejected off that nicing, rejected off it again, a lot nice as well. So I was like, okay, this is a valid area. We might want to keep this in mind if we want to play longs. And then once we form this candle, I was like, great, we have another fair value gap, a lot closer towards the where price is trending at the moment. Other than that, I didn't find any valid fair value gaps that I could potentially take trades off of. There was none over here, none over here, nowhere else. So we started pumping pre-market, and then we didn't fill this one out at this point. We did have it filled a little bit over here though. Coming into market, I was expecting price to fill, either sweep this low and fill in this fair value gap and potentially pump to the upside. And I wanted to take an entry off that. So we're still bullish on the 15. Again, we were bearish coming into market on the 15 minute. Here you can see we flipped bearish, and over here we flipped back to bullish right on the market open 15-minute candle. So our 15-minute was bullish, our 1 hour, 4 hour, and daily all bullish at this point. Now we scale down to the 5 minute. 5 minute, it doesn't look like there's a fair value gap here, but this is just a 15-minute one, so keep that in mind. This vertical line represents market open. So on the 5 minute, this was that huge 15-minute candle. This 5 minute also broke structure to the upside, and then we never broke back to the downside. We were just retracing. Since we were retracing on the 1 minute, we're also most likely bearish on the 1 minute, or possibly the structure turned bearish. So as you can see on the 5 minute, we formed a nice doji candle on this fair value gap, and I believe that's where my entry was. So on the 1 minute, we were coming down. See, we did switch bearish. We broke structure with this candle right here. We closed below this low. Okay, we became bearish at this point. So I was like, I was waiting for a break of structure back to the upside on the 1 minute to confirm that the 5 minute wants to continue pumping. So looking at this area where we filled that fair value gap, 15-minute fair value gap, on the 5 minute you saw we had a doji candle, which was a mixture of all these candles. We tapped into that. We even respected that nicely on the 1 minute. We started pumping, and at this point you see that this candle just barely closed above it, but that wasn't valid enough for me because that was very iffy. I waited for this candle, and this candle closed above it, and I entered because we had a liquidity sweep of this low, all these lows back here. We had this fair value gap fill, and we had a break of structure, and that's just enough confluences for me to enter, and this looked pretty valid and looked like it wanted to continue up. We entered right here. We were in profit for a few minutes, and then this big candle just dumped, and we were in massive drawdown. So we kept coming back, trying to come back up, but eventually we hit our stop loss, which was placed right below these lows, just to account for spread. But looking back, this was a valid trade. Honestly, it did hit our first take profit after we got stopped out. We literally got liquidity swept. Like, would you look at that? We also had this fair value gap, if you guys remember me mentioning a few minutes ago, on the 15-minute, right? This fair value gap. So this was also another valid area for us to potentially reject off of. But in the moment, I think I thought it was valid enough to just keep my stop loss below these lows, because this was the low that created that fair value gap, and normally I would place it below this low if we didn't have this fair value gap here. Since this fair value gap is here, it would be a lot smarter to put it below the fair value gap, because price could potentially want to come fill this imbalance before continuing back up. What I learned from this trade is, if we have another building block below our stop loss, if we're in longs, of course, below our stop loss, we might want to take into account of that and leave room to for price to potentially want to fill that, take or consider that building block, and then continue back in our original direction. So right now, I probably would have been stopped out on the trade, hit first take profit, and then break even. Because after we hit first take profit, we move our stop loss to break even. So here you see it hits take profit, and we'd adjust our stop loss back to break even. Anyways, like I was saying, if we have a building block near our stop loss, we want to make sure we take any account of that next time. Because we can see here, that was the exact reason why we got stopped out on our trade. It came and wanted to fill this fair value gap and sweep these lows. Well, it wanted to fill the fair value gap, and at the same time, it swept these lows. And you can see it came in, filled it on the 1 minute, 15 minute, probably looked very nice. Well, it was solid black candle, but we still respected it and pumped right after. And never closed below it on the 15 minute. So what I would have done was I would have placed my stops below here, maybe left a little bit of room just in case it wanted to come down before it continues back up. Or I'd be cautious of the 15-minute closing below this fair value gap. If the 15-minute wanted to close below it, that would be where my stop is. But if the 15-minute closed above it or inside of it, I would still be in the trade, and my stops would be below that 15-minute low. So that's how we're going to be playing it from now going forward. If we ever have a building block within our nearby our stop loss or below our stop loss, we're going to put our stop loss below that. Just take into account of that if price wants to consider that building block before hitting take profit. Alright, see you guys tomorrow.